morning, everybody. This is Alex, Senior Account Executive at GDMFX with the European Session Outlook. I'll start with the North American markets. We had retail sales in the US in Canada, month on month, 0.2% worse than expected at negative 0.1%, and CPI month on month, 0.3% worse than expected at negative 0.2%. In the US, market manufacturing PMI came out 0.4 worse than expected. We had a speech by Mester. She was hawkish. She said the trends for US employment and inflation are moving in the right direction. A quote from her is, if you inappropriately keep interest rates too low for too long, then you put yourself in a position of perhaps having to raise interest rates more strongly in the future. Harker also had a speech. He was more dovish and said that monetary policy is limited in what it can do for the economy. The Canadian inflation data, which came out early on Friday, worse than expected, had a negative effect on the currency, with the US dollar versus the Canadian dollar moving 120 pips up. The Dow Jones ended 10 points down, the Nasdaq ended 30 points down, and the Dixie is at 95.46. Today's events are Tier 2 and their new home sales month on month, and new home sales change month on month, and the Dallas Manufacturing Business Index for September. For the week from the US, we'll have on Wednesday durable goods orders, a testimony by Yellen, and on Thursday we'll have GDP analyzed for the second quarter and another speech by Fed's Yellen. In the European markets, European stocks moved decisively lower on Friday, giving back a chunk of the prior day's rally after economic data painted a mixed picture of the region's recovery. The week's gains came as the US Federal Reserve refrained from raising interest rates and indicated it would keep monetary policy loose for at least another few months. However, on Friday, there was a disappointing reading in the PMI, the Purchasing Managers Index for September, which indicated the pace of growth for private sector activity in the region slowed. The Eurozone Flash Composite PMI dropped to a 20-month low of 52.6, missing forecasts of a 52.8 print. Later today, Mario Draghi, the head of the ECB, will be having a speech, as well as one tomorrow. On Friday, we have CPI year-on-year readings from the Eurozone. In the UK, the pound fell to a 5-week low on Friday after a comment from Boris Johnson that the UK will trigger Article 50 in early 2017 and will manage to separate from the EU in less than 2 years. However, his comments were quickly parodied by the Prime Minister's office, where they refused to endorse the comments made by Johnson. This shows that it is still very much unclear how the UK will go about the EU separation and how long it might take. The sterling managed to retake some of its losses on Friday, as Bank of England MPC Christine Forbes commented that she does not see the need for further stimulus for now. The FTSE 100 was 15 points down and closed at 68.56 on Friday. The GBP USD had 120 pips movement down on Friday with 175 pips range, and it's going sideways today. The week's main events: consumer credit, mortgage approvals, GfK consumer confidence, GDP year-on-year, and GDP quarter-on-quarter as well. All right, on to the Asian and Pacific markets. In Japan, on Friday, we had the Nikkei manufacturing PMI for September come out 1 point better than expected and 0.8 better than previous at 50.3. From January, this was under 50. And the Japanese all-industry index, activity index, month on month, 0.1% better than expected at 0.3%. This morning, KURODA had a speech. He says, high uncertainty over global economy is to continue in the future. The Bank of Japan is trying to create a steeper yield curve, which offers an incentive for banks to make loans, customers to borrow, and the economy to strengthen. It is an antidote to its negative interest rate program in place since January, which has crimped the profits of financial institutions. The Bank of Japan will likely not change its interest rate before the Fed does. Asian stocks dropped by the most in 2 weeks, while Haven assets including the yen and sovereign bonds, rose as investors weighed the prospects of major oil producers' agreement output curbs and at talks this week. For Tuesday, we'll have Japanese monetary policy meeting minutes. And for Thursday, we'll have another speech by the KURODA. On Friday, we'll have New Zealand building permits seasonally adjusted month on month for August, and Japanese CPI, unemployment, jobs application ratio, overall household spending, and preliminary industrial production data. All right, on to the last sector for the day, the commodities. We had the Baker Hughes oil rig count, and the number of rigs drilling for oil in the U.S. last week rose by 2 to 418, marking the 12th increase in 13 weeks. Gold prices edged lower on Friday, but notched the strongest weekly advance in almost 2 months after the Fed held off on raising interest rates and scaled back the number of rate hikes it expects next year. The crude prices rebounded early today in the morning after Algeria's energy minister said the day before that all options were possible for an oil output cut or freeze at this week's informal meeting of OPEC producers. That came after prices tumbled 4% on Friday amid signs Saudi Arabia and Iran were making little progress in achieving preliminary agreement to freeze production. Gold had a range of $7 at 1,333, going down now. Silver had a range of 45 cents at 19.45 now. Crude oil had a $3.20 range at 44.78 now, and natural gas is trading at $2.96 at the moment with a range of 8 cents. And that was all for today. Thank you for the attention. I'll see you next time. Goodbye.